Our guest this week is Ian McCombie from Baillie Gifford UK Growth. So the news this week, I've picked out three things as usual. A little bit about Troy Income Growth, which announced annual results this week. We've got a new entrant to the sector, AtratoOnsite Energy, but it's just one of a number of things that have been raising money. So I thought I'd just have a quick look at what's been going on with that. So starting with Troy, its results weren't great, to be fair. It's a quite long way behind the all-share index, and that's dragged down its 10-year numbers too. So as you can see there, it's only just about beating the all-share over 10 years now, and it's not beating it in share price terms. That's really down to where it's positioned. So because it's got a sort of focus on quality and defensive stocks, it missed out completely on the value rally. So things like banks and energy and mining that went soaring up after the vaccines were proved to be useful last November. They totally missed out on that. They, of course, weren't also in the growth technology type things that have been doing well prior to that and have been bouncing this year. And so that's really not been helpful. And the stocks that it has got are things like Unilever and Reckitt, and they have held it back this year by quite a substantial margin. It's a very similar story to Finsbury Growth and Income and Nick Train. Same sort of stock, same sort of focus. It's not working at the moment. Compounding this, though, they cut the dividend by 29.5%, which is enormous, and it didn't yield that much to start off with. And I think this is becoming a real problem for it. Not surprisingly, people have been voting with their feet. It's got quite a strong discount control mechanism, so it's had to buy back 7.7% of the company, 26.8 million shares, which is quite a large amount of cash. The manager's going, we knew that already, it's been long flagged. So Francis Brooks steps down at the end of the year. Hugo Yu and Blake Hutchins to take over, but they've been around for a long time. So from that point of view, it's sort of business as usual, and we don't expect to see any change in the way that the fund is managed. My big question really is, given the yield that it's on, should it still be in this equity income sector at all? And if it wants to stay there, why doesn't it offer an enhanced yield in the way that many other funds do? So here's the sector as it stands last night. And as you can see, I've been saying for a while, I think there's too many of these funds. There's definitely too many small ones. It's about mid-right size-wise, so it's a decent-ish size, but all these things could be bigger. Discount-wise, because of the discount control mechanism, that's not too bad either. Where it really falls down, as it says, is the 21st, 22nd in terms of yield. And the only one that's lower than that is Finsbury Growth, which I think has a similar issue. That it doesn't probably deserve to be in this sector. Charges are okay, so that's fair enough. Here's the 10-year returns, and as you can see, it's particularly bad over a year, and that's put it down towards sort of third quartile over most time periods, which again isn't great. This is a chart of that, though. So this is just plotting the yield against the 10-year annualized return. And you can see there, so that each one of these is a fund. That's where Troy stands. So one of the lowest yielding funds, that's Finsbury Growth up there, but also one of the worst performers as well. So not great, really. At least Finsbury can argue, well, we've paid you a low yield, but we've given you incredible returns. But you know, this is probably not much of a defense, I think. One thing that I keep thinking about is that we've got an awful lot of these UK equity income funds. We haven't really got that many global equity income ones. I mean, a couple of funds have made the shift from UK to global. I think there's room for more of that to happen. And you can see just how much better these global growth funds have been doing. So returns going up scale there. The middle UK equity fund has returned less than 10%. Most of these funds have beaten that by quite a decent margin, helped by the fact the MSCI world has been doing so much better than the UK. The outliers down here, the high yielding things that haven't made the same returns, things like Murray International. But even they've done sort of same sort of thing as Troy on much, much higher yields. I do think there's an opportunity missed here that if you go international, you get a much broader spread of stocks and much greater opportunity to make money. And you're not stuck with whatever's going on with the UK economy, which we were hoping was going to bounce back strongly, but there's more question marks now, especially with more inflation. So we'll wait and see what happens. But I think at the very least, Troy should think about, can I enhance the yield that I pay? So AtratoOnsite Energy raised 150 million quid, which is the most it was going for. And the statement is worded in such a way as basically investors are uncovering the IPO maximum multiple times. These things seem to have money chucked at it. I do think actually there's a great opportunity here in this rooftop solar stuff. But it's not, it's a fiddly sector. It's fiddlier than doing ground mounted solar, where you can sort of deploy things over an entire field. Doing it building by building is just a more complicated process. So that they think they're going to take, well, up to 12 months to deploy that money, and then they'll presumably be back for a while since there's such an amount of money to be invested. But I think what I'm saying here is that there's probably room for another couple of funds like this, if they can get hold of the pipeline. So this is targeting 5% yield and total returns of 8 to 10% per annum. That's not bad. I mean, that's probably one of the reasons why people are going for it. The way that it works, though, compared to a lot of the ground mounting things, which are obviously very reliant on subsidies, these are selling energy to the people who are occupying the building. And by doing that, well, I will come on to that in a minute, but basically you still need a grid connection, because there'll be times, obviously, when the sun's not shining and you're not producing power, but there are times when the sun is shining and you're going to get quite an excess of power. So you should be able to sell that back to the grid. That excess energy is going to be sold at prevailing market rates, and I think that actually that might be quite low. And they're relatively easy to do from a planning point of view, these things, because if it's less than a megawatt, then it's you just shove the things on the roof under permitted development rights. So that helps. It also helps, as we've got a question here asking already, Atrato obviously just shoving these panels on top of the existing supermarkets in the supermarket income REIT portfolio. And that makes life an awful lot simpler. For the customer, they get their energy a bit cheaper, maybe quite a lot cheaper. And that is obviously very good news for them. It's also a bit more efficient from an energy point of view overall, because you're not pushing the power down the national grid, you aren't actually losing some of it along the way. So from that point of view, more of the energy that's being generated is being used, which is good. Now, just looking at what could happen with this sector, Atrato, in its prospectus, saying we're targeting £318 million pipeline, 499 megawatts. So I had to go and do some sums here to see how it sort of worked. There's a project in Hull with Associated British Ports, which is supposed to be the largest one in the UK at the moment. So on rooftops there have been 21,000 solar panels covering 35,000 square meters to give you 6.5 megawatts. So on that basis, that would imply that Atrato's looking for that pipeline about 2.7 million square meters of roof space. And there's currently supposed to be 2 gigawatts of commercial rooftop installations in the UK, but the target is to get that up to 6.8 by 2030. So the implication there is that that's about a £3 billion opportunity to cover about 26 million square feet. So that's my thinking, that if we're going to install that much more, there is probably room for another fund or two doing this. and there's obviously room for Atrato to come back and raise more money and keep going at it. But the opportunity is a lot bigger than that. So Department for Energy and Climate Change, as it was in 2015, reckoned that there was 2.5 billion square meters of south-facing resurface in the UK. Obviously, not all of that is going to get solar panels put on top of it, but a big chunk of it could. I mean, the report that I was reading was saying that perhaps half. So that's way in excess of the amounts that we're talking about here. So we're going that way. Yeah. But there's quite a big implications from that, because if you think about the power companies, they've got all us annoying little residential household people to cope with and keep moaning about stuff. Well, they've also got some very big customers, including things like supermarkets. If they're going to lose all of those, that's quite a big chunk out of their revenue. The grid is going to be really stretched, because it's very important, as we know, to try and keep the frequency balanced on the grid. If you've got really quite considerable amounts of power being chucked onto it at times when the it's really quite sunny in the UK, and that's going to put significant strain on it. So what the grid's going to have to do is either choke off that supply by just basically saying we can't accept it, in which case you have to store it somehow, or you could end up with kind of zero or even negative, like punishing prices for delivering power at times when it's really not needed. So that's going to distort things quite substantially. And I think part of the reason that we haven't gone hell for leather in terms of pursuing this opportunity up till now is the grid's still not quite sure how it's going to cope if this does happen. So we'll just have to wait, watch and see. Now, as I said, this is just one of a number of fundraisers, and this is just in this week. So we've got a big chunk of money raised. That's what, probably over $1 billion there just in the week. And then a big chunk of fundraisers launched. We know that there's more IPOs that have already been announced and are busily running around collecting the money, and we're going to find the results of those. And maybe even get one more today, maybe get some more next week. And I think there's quite a good chance that some more of those are going to get away. We've also got things like the Greencoat UK Wind fundraise going on. So that looks like it's going to be enormous. It's incredible how much money is just being chucked to the sector. So we've got 15 new investment companies so far this year. That compares to 8 in 2020 and 9 in 2019. And we already broke the previous fundraising sector the previous fundraising record for the sector in September. So that starts to ring slightly alarm bells to me. And I don't know why, maybe it's just me being sort of grumpy, but it feels a bit sort of rational exuberance times again when you get these number of launches. But having said that, most of these things look relatively sensible. So we'll have to wait and see. The other thing could just be the good news factor that people are choosing to invest more money in investment companies rather than open-ended funds because of the opportunities available that we're bringing forward. That's really good if this is happening. It could mean that there's a lot more to go for. Just the one more question there. Why bother with rooftop if other forms of solar, like solar farms, are easier? Not easier per se, and it's just a question of, like, once you've got the grid connections and everything else sorted out with a field or an airfield or something that you want to put a solar farm on, it's very straightforward. But getting that planning and getting the grid connection put in can take a long time. And if you've got a supermarket or something that's already got a grid connection there, from that point of view, it's simpler. So enough from me. Let's now